Good morning. You are watching a live daily market outlook for Thursday, 31st of May 2012, prepared by Windsor Brokers. We're at the end of the month of May with the dramatical movements in the market, with the latest headlines speaking on their own. Spain was per flight out of risk to U.S. bonds, dollar. Euro throws Spain to potential lifelines. Spain cries for help. Is Berlin listening? Most of these things now we saying that if Spain is now in the main focus and the deepening crisis there is now one of the main drivers of the market. Single currency continues to travel south after losing its 125 temporary base with yesterday's loss of 124. Next round figure support. Recall of something that I mentioned a couple of days ago. After 125, basically there will be no significant levels to support the price, except the round figure supports on the way towards 120 zone, with only one that is our next downside target at 121.50 June 2010 low, seen as a significant hurdle on the way towards 120 and 118.75. Euro also hits 11-year low against Japanese yen, while dollar yen dipped to 3.5-month low yesterday, as well as Aussie dollar against yen traded at a 6-month low. The US bond yield hit 60 years low. That is basically undermining the dollar yen, and this was one of the key drivers of the dollar yen lower after losing some technical supports yesterday and hitting levels under 79 that acted as a short-term support. The lower is hit 2 weeks ago while the recovery attempt failed and dragged the pair back to the broader downtrend. The dramatical recovery was seen on yellow metal yesterday after gold again hit the critical support zone. Low of yesterday was 1532 zone with the bounce nearly $40 higher, hitting the session high at 1569.40 in the late hours of yesterday. Currently consolidating recent gains at around the 1560 zone. This has actually reduced the risk of further heavy losses of the yellow metal, as loss of critical 1530-20 support would be the trigger for a further extension of its already a couple of months downtrend from a record high of gold from 1920 posted in 2011. From today's events, we have the full calendar basically today, and a number of events are due to be released later on the day, with some already being released. So we'll start from those that were released during the Asian session. From Australia, the building approvals came at a negative reading compared to the extremely positive one of 6% from the previous month. Minus 8.7 was today's release. And the Japanese average cash earnings are at 0.8% compared to 1.1% forecast. Significant gains were seen on the Japanese housing starts that rose by 10.3% compared to 3.3% forecast and 5% of the previous release. Swiss GDP also came at better than expected, 0.7 compared to 0, unchanged basically forecast, and 0.5 of the previous month. German retail sales also bounced higher. 0.6 is today's release compared to 0.1% forecasted for today's release. And basically the quite positive release early morning from Germany actually gave some boost to the eurozone, to the euro after European session opening, currently regaining 124 level. French consumer spending came also at 0.6, better than 0.3% forecast, and minus 2.6 previous month release. US ACB, pardon, Eurozone ACB President is due to speak at 7 o'clock. GMT already started with the German unemployment change and the rate seen next at 7.55. The forecast for unemployment change is minus 6,000 compared to 19,000 of previous month, while unemployment is expected to stay steady at 6.8%. From Eurozone at 9 o'clock GMT CPI flash estimate, a slight decrease seen for today, 2.5% compared to 2.6%. From US Challenger jobs cuts due at 11:30, no forecast. While the key release from today is the ADP non-farm employment change. That is the main indicator for the coming US non-farm payrolls that are due at the beginning of the month, with the 145 new jobs, 45,000 new jobs seen adding this month, month of May, compared to 119,000 of the previous month. From US preliminary GDP quarterly release is forecasted at 1.9, decrease from the fourth quarter of 2011 at 2.2%, while also significant release today is the US weekly jobless claims that are forecasted marginally lower from the previous 370,000. Today's consensus is 369,000. From Canada, at the same time, 12:30, current account is forecasted at minus 11 billion Canadian dollars, widening trading gap from minus 10.3 billion of the previous month release. Further in the afternoon, 13:45 GMT is Chicago PMI, 56.7 is consensus for today compared to 56.2. With the last to come US weekly crude oil inventories due at 1500 GMT. Another build of the US of the crude oil stocks is seen for this week's release. This is, if I'm not mistaken, 5th or 6th week in a row that US crude stocks are building up. 200,000 barrels are forecasted for today, compared to build of 900,000 barrels of the previous week release. And now we are moving to the charts and see the latest movements and the forecasts expectations for today. Starting as usual with the single currency against the dollar, after dipping to its fresh two-year low at 123.56. The single currency is now in the recovery mode, based mainly on the overextended conditions, oversold conditions on hourly chart, as well as quite positive data that came this morning from Germany. Strong resistance comes at the previous strong support at 125 zone. 124.96, 125 is seen as the next significant barrier, and nothing serious to expect for now, as long as 125, 126 zone holds. Basically, if we see the lift above 126, 126.20, this will be a signal for a short-term relief for the single currency, and possibly to allow some stronger recovery action. As long as these levels cap the upside, the current movement is seen as corrective, with the firm downtrend that accelerated basically losses after upside rejection at 128.18 at 22nd of May. And the loss of a yearly low at 126.22, with the recent loss of near-term base at 125.00, opening way towards our downside targets 121.50 and the more significant 120 and 118.75 that are becoming a very likely scenario at this point, as quite negative tones are heard from the Eurozone, with Spain now coming in focus, and the deepening crisis sees investors running out of euro, with heavy sales driving the price lower and lower. As said, corrective action underway only in case of break above 125 and more significant 126, 126.20 would be signal for some stronger corrective action. Otherwise, it will be just another minor correction ahead of fresh weakness. Selling opportunities are seen as long as 125, 126 zone caps the upside. Similar to Euro sterling is dragged actually by Euro's weakness after losing some very significant supports at 156.40 and 156.00. Accelerating losses in yesterday's sharp fall through some minor supports at 155.30 and 155.00 with the recent low seen during the Asian session at 154.61. Again, a bounce seen on the oversold hourly conditions, faces initial resistance at 155.50 and more significant 156, 156.40, and basically only regain of one of the later one would ease the current bear pressure and possibly allow for some stronger corrective action on the upside. 157, basically the 157 zone, 157.0016 is now seen as a critical level and the break point, and if we see the lift above these levels, then some stronger retracement of the recent 163 to 154.61 down move would be seen with the 200 days moving average next strong barrier at currently at 157.91 and the lower high at 158.47 seen on a potential break. As studies remain firmly negative and the pair continues to trend lower despite negative situation on the daily chart and the indicators at their extreme downside points, still showing no firm signal of any stronger recovery. That keeps the focus at interim supports at 154, 153.60 and our key support and the short-term target at 152.33, yearly low of cable posted on 13th of January 2012. The dollar yen also accelerated losses yesterday after break of triangle support at 79.60 and interim supports at 79.40.20 with the loss of key short-term level at 79.00 extending as well as break return below the main bear trend line of 84.08, extending losses so far to 84.70, just ahead of our next dynamic support at 78.60, the 200 days moving average, and next to be seen on a potential break here 78.30 beginning at the mid-February 2012 range top, and 78.00 as around figure support as the pair continues to head south and loses the last significant support 61.8 Fibonacci retracement at 79.16. More likely scenario would be further easing towards our targets as the current action is approaching 78.60, the 200 days moving average, and a possible full retracement of the 76 to 84.17 rally would be seen on a loss of 78.30 and 78.00 as strong support levels. Prevailing trend is still bearish and nothing to be expected unless the pair regains 80 and 80.60. That will be the break point and the signal for a stronger recovery. For now, the bear pressure keeps focus at the downside as current price action approaches 78.60, our initial support, and 200 days moving average. The dollar Swiss is a near-term corrective action this morning after a strong rally accelerated on a break above a strong barrier at 96.00 with the extension higher, clearing our next target at 97.00. That also marks 150 days moving average on the weekly chart with 97.18 seen so far. Corrective action on overbought near-term studies now so far tested our initial support at 96.75 ahead of dynamic to 55 days exponential moving average at 96.50, and the minor supports at 96.36 and 96.22. Strong support lies at 96.00, previous resistance that kept the price action limited for a couple of days, and this for now expected as this is also close to 38.2% retracement of 93.66 to 97.18 ascent. Is expected to contain any stronger dips in order to maintain the recent bullish structure fully in play. Break above 97, firm break, regain of 97, firm break higher is would be focusing 97.43, 97.73, and the 98.00 as round figure support seen as next targets on a lift above 97.00. On the downside, loss of 96 would be signal for a stronger corrective action with the 95.40, 95.30 next very strong support, 50% retracement, and the low of 28th of May seen on a potential break below 96.00. The gold was basically the top performer yesterday after a strong bearish tone pushed the price lower in a two-legged down move from recent highs at 1583, hitting lows at 1532, and again retesting a critical support zone at 1520.30, where it's also the 100 days moving average on the weekly chart. With the break of this level, as we said in our previous sessions, seen as a potential trigger for a more significant retracement of yellow metals 10-year long uptrend that gained from approximately levels under $300 per ounce, hitting points close to $2,000 per ounce, and this is so far the strongest corrective action. With the break of this critical support to open way for more significant losses, 1500 seen as next target ahead of 1478 low of 26th of June 2011. Back to the lower time frames, as yesterday's strong bounce from 1532 regained the levels at 15, close to 16, pardon, 15, I do apologize, 1569. This eases the immediate bear pressure and reduces risk of fresh weakness for the yellow metal. However, further gains and regain of a minimum 1583 previous double top is required to confirm the current action. Otherwise, risk is seen of a lower top and fresh weakness, as so far on the 4-hour chart, 55 days exponential moving average limited the current strong rally, and we need to see the regain of minimum 1583 and at the later stage regain of our key barrier at 1600, 1616 in order to confirm lows so far intact at 1530-20 zone and allow for some stronger recovery. Otherwise, holding below 1583 and more significant 1600 would keep downside vulnerable for possible fresh attempt towards 1530-20 critical support, and 1500 seen as the next target, also around the figure support. So far, some comments, as we mentioned in one of the previous sessions, most of analysts actually favored the test of 1600 per ounce rather than 1500 per ounce. However, so far the 1500 resists on the downside stays so far intact, but from the upper side also 1600 is still out of reach for the yellow metals price, and current narrowing of the range would be likely resulting breaking of either side and defining the fresh direction for the yellow metal. The broader picture, of course, shows the firmly negative negative trend of the gold, and the loss of our critical support, as said, would be a trigger for some more significant weakness in the short term. And a quick look at the oil that again broke lower, loss of its previous low of last week at 89.28, dipped so far to 87.26 as raising concerns about Eurozone crisis and lower demand for the energies. And again, despite recent failure of negotiations between Iran and the West, did not manage to give any significant support to the oil price as it continues to spiral lower, as shown on the daily chart from its recent lower top the beginning of May, peak at 106.41, so far hitting 87.26, and this keeps the immediate focus lower as the pair lost 88.54, 61.8% retracement of the longer term rally from 74.94 to 110.53. Next level that has already been touched is 150 days moving average at 87.23, and then nothing much seen except 200 days weekly moving average at 81.60 on the way towards very strong support at 78 zone, where we have a 74.94 low of 2nd of October, 2011, and the low of 7th of August 2011 at 75.70. So this would be if we will be seeing the continuation of recent very strong downtrend mainly caused by fears of the deepening of the Eurozone crisis and basically weakening of the major world economies. Then the likely scenario will be a revisiting levels at 78 zone. That was all for today. We would like to see you again tomorrow with us at the same time at 7:00 GMT with the latest news and the updates. Until then, wish you a nice day and successful trading. Good luck.